BP, the British-based energy giant, says it's suspending its share buyback program. As part of a strategic shift, it plans to use the money to bolster cash flow and invest in new oil and gas opportunities. This is almost heresy among the big oil companies. Chevron, Exxon Mobil and Shell have continued to buy back significant amounts of shares. Lower oil prices, of course, have been eating into their profits lately. Let's get more from Rob Thummel, Senior Portfolio Manager at Tortoise Capital. Rob, thanks very much for joining us. I mean, this is, you could say, a gutsy move by BP. Investors have become accustomed to these share buybacks.
They sure have in the oil and gas space, and you're right, Andrew. That's one of the great things about the energy sector is it generates a lot of free cash flow. Early on, a lot of the energy companies actually generated a lot of free cash flows and reduced their debt. BP did not do that as much, and so now BP has a stated goal of reducing their debt. And as a result of that, they are now going to have to stop buying back shares because they need to take the free cash flow that they have and not buy back shares, but reduce debt. And so stocks trading down a little bit today as a result of that, and probably will continue to trade down until BP gets its debt level down to where it's wanting it to be.
And the backdrop here, of course, is that BP, under the previous CEO, Bernard Looney, made huge investments in renewable energy, and they're backing away from that now.
Yeah, that's exactly right. BP took a little bit of a different course than the other majors like Exxon and Chevron. Exxon and Chevron actually were pretty acquisitive and bought some oil properties in the Permian Basin in particular during the low oil price environment, and that's starting to pay off for them for both of those companies in terms of the cash flow coming back to shareholders. BP went the other route, as you mentioned. They went down more of a renewable energy route. The returns just didn't seem to be there, so now BP's in the process of still generating free cash flow, but it's going to have to use some of that free cash flow to reduce their debt.
Would you be a buyer of BP now? Do you think that investors have digested the disappointment is in the stock already?
Well, what I said, Tortoise, we look for some of the highest quality companies and highest quality managers of those oil and gas assets. We're not a buyer of BP right now. Obviously, the stock does trade at a discount to Exxon and Chevron. But if you just look at the project inventory for Exxon and Chevron and even other larger oil and natural gas producers, we see better opportunities within the other major oil and gas operators as well, rather than at BP.
Wow, I'm just looking at a 5-year comparison here for BP and Exxon, Chevron and Shell. Exxon has just been on fire lately. Certainly if we can put up a 5-year chart for XOM, it's been shooting up.
Yeah, well, I think what investors have to, broadly speaking, I think Exxon benefits from maybe a bit of a rotation. Obviously, big cap tech was popular or has been and been a great investment. What Exxon and the whole energy sector does, and Exxon's leader of the pack there is generate free cash flow, and that's what investors have been looking for. And so they've been rotating to a certain extent into energy, get free cash flow, to get an increase in yields, dividend yields. If you're looking for a dividend yield, the energy sector is a great place to be.
And Exxon, of course, known for its stubbornness. There's the wrong way and the Exxon way, and they just have they have proceeded really, as you say, with buying up hydrocarbon properties and not investing as significantly in renewables.
Yeah, no, that's been their goal. They've done a good job of allocating capital. Frankly, they've done a fantastic job of generating free cash flow, managing manage the business when there was a downturn. This is not the first time that they've had to manage through a low commodity price environment. So the team at Exxon has done a phenomenal job, set themselves up, for the future pretty well. They've still got carbon capture business that they actually acquired from Denbury and the infrastructure associated with carbon capture. So that's really important as well. Exxon's doing some things looking at rare earths in the Smackover field, basically in northern Arkansas. That's an opportunity as well. So there's just a lot going on. Of course, Guyana was the big thing as well. Obviously, Guyana is a major oil find for Exxon as well, and that will pay dividends literally to shareholders into the future.
BP has its own major oil find off Brazil. Could that ignite the stock? Do we still have to hear more about how rich that discovery is?
Yeah, I think so. I mean, there's a lot of oil fields out there now, and gas fields. Obviously, BP's has Brazil. They talk a lot about what's going on in the Gulf of Mexico. There's a lot going on in Guyana. Now we've got Venezuela. And BP won't probably be involved in Venezuela. So that might be a catalyst for the stock. But I'll be honest, I think getting their debt down to a more manageable level, like BP is doing, is probably a good opportunity here. This is kind of the standard. Look, new CEO is going to come in, clear the decks as far as capital allocation, and will allow her to decide what course and direction she wants to take with the business. And it's clearly she wants to get started off with a better balance sheet.
Thanks very much indeed for joining us. Always great hearing from you, Rob. Rob Thummel, Senior Portfolio Manager at Tortoise Capital.